What's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Trading Week Recap. This is a series I post every Friday where we reflect on the past trading week. I'll let you guys know what I'm thinking about the general equity markets, and we'll also touch on a few stocks that we've talked about over the course of the week that I feel are worth revisiting. Now, the markets are closed today in observance of the 4th of July, so happy 4th of July weekend to all my American brothers and sisters out there. If you're not from America, though, still enjoy this 3-day weekend. The markets can get stressful at times. It's always good to unwind, chill out, relax, spend some time with your loved ones, eat some good food, cheers some drinks, all that good stuff. I do also want to say that we just hit 10K subs on the channel. I want to keep this short. I just can't thank you guys enough. Thank you so much for giving me your time, giving me your attention, engaging in the comments. We're building such a solid community here, and I'm just so happy that just to be a YouTuber right now. Making this channel was one of the best decisions I've ever made, and you guys make it so much more fulfilling. Trading is awesome. I love the sport of trading and the research involved and everything involved with trading, but trust me, this is so much more fulfilling, and I truly do appreciate you guys from the bottom of my heart for playing a role in this growth. All right, so to the next 90,000, 100K next. Hit that subscribe button right now if you're not subscribed already, if you are new, to help us get there. All right, huge goals, but I mean, shoot for the stars and maybe you'll hit the moon, right? Okay, so give the video a like too if you do gain value from it, or if you did play a role in the 10K subscribers. I would just appreciate it if you gave the video a like. That said, let's get straight into this. Quit the babbling, but truly I do appreciate you guys. Thank you so much. Okay, so we have in front of us the SPX S&P 500. We'll kick it off with a good old equity market rundown. Let you guys know what I'm thinking. Equity markets are in a rough place. Well, or not rough place, they're actually in a great place. The economy, I should say, is in a rough place, and I did put in the title, stock market versus economy, and we have been saying for a while around here that and it is a well-known fact at this point that the market and the economy are two very different things. That is evident. Okay, so we will take a look at a few articles that cover kind of the macroeconomic landscape right now. A big reason the markets did rally this past week is because the June jobs report was released, and the numbers were a little better than estimates. Objectively, they're still bad relative to where we were pre-pandemic. They are better than a lot of people expected, but we will touch on this. This is just a quick article. We're going to look at a few highlights here. This article is actually an amazing article that I found that really kind of counters that argument and explains a lot of the reality of the situation and kind of just puts aside the headline readers in this case. Okay, so speaking of headlines, we're actually going to be headline readers in this scenario. I've done this before, but this is more of a transition because we are going to be talking about the biotech stocks. Those are the stocks I want to cover today just because I feel like those are I just posted an EV video yesterday, so I feel like these are worth covering, and I know a lot of you are interested in that as well. Okay, so we will cover the COVID-related biotechs, vaccine stocks, treatment stocks, and we will be headline readers in this case. I don't want to stuff any more articles about this in your face. I know you guys are seeing a lot of this. You guys know this already, but again, this is just kind of a transition into talking about those biotech stocks. All right, so as always, before we get into the charts, we will touch on the articles. We have to establish a fundamental base prior to getting technical, so let's try to make this quick. All right, so stocks rise after better than expected jobs report to close out winning week. Okay, so look at the titles here. It's very important how a lot of these large media outlets are phrasing this, okay? Very optimistic. Optimism is great. Optimism is necessary for the human species to thrive. But again, you got to be real, okay? You got to be rational and objective. Stocks rose on Thursday following a better than expected U.S. jobs report as the economy tries to recover from the coronavirus pandemic. Record job gains, okay? So again, you see how that's the headline. That is what is highlighted. We'll just read this and then we'll dive into that kind of counter article, but it's a really good article. Trust me, stick around. Wall Street started the session with sharp gains after the government reported that a record 4.8 million jobs were created in June. Economists were expecting 2.9 million jobs were created. The unemployment rate fell to 11.1% from 13.3% in May. Economists were expecting a rate of 12.4%, according to Dow Jones. And I quote, "Another major surprise here in terms of market expectations," said Christian Sherman, U.S. economist at DWS. "What we've seen in May and June is a blueprint for a fast recovery, but only once the virus situation is under control." Okay, so that I know he means well. That, in my mind, though, is kind of a whack thing to say, just because the virus is absolutely not under control. It arguably is the least controlled at this point, at least in the U.S., which, again, we will look at some headlines later that just emphasize that point. But let's take a look at this. This one is a little longer. I do recommend you guys look at this article. It is 538 ABC News, titled "The Unemployment Rate is Falling, but More People Are Losing Their Jobs Permanently." And this is important, okay? Again, the unemployment rate is falling, which is good, but the more people are losing their jobs permanently, which really well sums up just kind of the rationale behind why the economy sucks and why it's going to be so much harder to rebound. And I know a lot of you guys understand this, but it is fairly general consensus that the economy will just rebound, bounce back to normal like that, and that is. In my mind, just obviously not the case. So let's read over this quick. Again, there is a lot to read here, but trust me, this is good, so please stick around. These days, reading the monthly jobs report can feel like opening a time capsule. According to the data for June, which was released today, the recovery from COVID-19 recession was still chugging along as of the middle of last month, when the two surveys that form the backbone of the report were conducted. The unemployment rate fell from 13.3% in May to 11.1% in June. 4.8 million more people were employed in June than in May. Okay, so again, good if you look at the headline and you just read that. Those numbers look promising, but it's important to remember that they're just a snapshot of what the economy looked like in mid-June, and a lot has changed since then. Okay, you guys remember, times are changing quick. This is a crazy world that we're currently living in. Like, news comes out, like significant news is dropped at least every day at this point. Okay. Most importantly, COVID-19 infections have spiked in states across the country. Many governors have rolled back the phased reopenings that brought many jobless workers back into the labor force. That could have a seismic impact on the sectors of the economy, like leisure and hospitality, that saw the biggest gains in June. Okay, so again, biggest job gains in June were in leisure and hospitality as states began to reopen. But now that a lot of these states are seeing record cases of COVID popping up, they are pulling back their reopening plans. And what do you think is going to happen to these workers that were literally just rehired? Okay, even underneath the surface of the June report, there were signs the recession is deepening. Crucially, the number of workers who have permanently lost their jobs rose quite a bit, signaling that for an increasing number of Americans, getting back to work won't be an easy matter. If you just focus on the report's headline numbers, the unemployment rate and number of payroll jobs, the country's economic situation is looking up in June. In fact, the drop in the unemployment rate may have been even more dramatic than the top line number lets on. Over the past few months, the Bureau of Labor Statistics has been struggling with an issue that's unique to our pandemic-ridden times. A substantial number of workers were reporting that they were absent from their jobs for the entire week, referencing survey for other reasons. That probably meant they were temporarily out of work because of COVID-19, but they weren't counted as unemployed. Okay, so you see here unemployment is falling, but it's still very high. That's a very important. And again, this is obvious, you guys. I love the optimism in the market. Like, obviously, the market sees the week-to-week unemployment numbers. And again, the market and the economy are very different, evidently. And over the course of this, like if we just look here, over the course of this pandemic, we've had terrible jobs report, this entire rally, this entire like dead cat bounce relief rally, whatever you shall call it. Terrible jobs report have come out for the duration of this rally, and it has had little to no effect on the market. The market actually loves bad jobs report. Okay, so if maybe this past week or these past few weeks, now that jobs reports are getting better, that's why the market's falling. But I'm just kidding, guys. But it seems like the market loves bad jobs reports, except for this week when it did bounce a little bit. Okay, so if you look at this again, unemployment is still sky high. Although it's better than it was up here, it's all about where you establish that baseline, okay? So we'll read this quick. Bear in mind, though, we still have a long way to go before anywhere near pre-pandemic levels of unemployment. It's all about your frame of reference, and that's perfectly said. It's all about your frame of reference. An 11.1% unemployment rate is still stunningly low compared with where we were in April, when close to 20% of the population was unemployed. But it's still higher than at any point in modern history. Okay, so just wrap that around your head, guys. Unemployment, although, again, these temporary, these bang, bang, bang numbers, week-to-week numbers, month-to-month even, look good and look promising. We're still at unemployment levels are still higher than at any point in modern history, as these guys said, which is true, including the unemployment rate at the apex of the Great Recession. Okay, so again, even though things seem good right now, the current unemployment rate, which again, as states begin to pull back their reopening plans, are still worse than they were during the Great Recession. And there are many reasons to believe that the recovery could stall or even backslide in the coming months. One clue is tucked in the June report. Of those who did lose jobs, the largest share of them were permanent than in previous months. And again, you guys, look at this chart right here. We'll read this, we'll look at the chart, and then we'll dive into the S&P charts. As more job losses become permanent, this recession will look more and more like an ordinary recession, where in recent history the recovery has been a slow slog. That means that hopes of a quick recovery will be slimmer and slimmer. Okay, so again, stock market recovery, V. Economic recovery, could be an L, maybe even worse. We don't know because things are so things are so uncertain right now. All right. So again, look, permanent layoffs are still growing as temporary layoffs fall. Number of layoffs seasonally adjusted by permanence. This kind of transparent bar right here is the number of laid off workers as a whole. Permanent layoffs are very different. I'm sure you guys know someone who has lost a job, and obviously, again, you want to stay optimistic. You want a job back. A lot of people actually don't want job backs because the unemployment, people realize that unemployment is awesome and you don't have to work for your money, which is terrible. I feel like, I mean, I don't want to get into this, but unemployment, especially with the $600 bonus on top, is literally encouraging people not to get back to work. And that is a terrible thing that you can do for the economy. Again, good for people. It sucks that people lost their jobs, but you are incentivizing them to literally not go back to work. And I get it. I understand it. Okay. So permanent layoffs are bad. That is what permanent layoffs have a permanent impact on our economy. Not permanent, but a very long lasting. Okay. So as more job losses become permanent, this recession will look more. Okay. Sorry. I just read that. But anyway, that said, again, these permanent job losses, these are the metrics you want to look at. These are you want to look at the things like people, especially with all this news, this headline reading that we are going to do right after this. But again, in a world of headline reading right now, there's so much, again, now, people have such short attention spans, and it's so important to keep the bigger picture in frame. And we will look at the bigger picture now. You know what? I'm not going to rant on that anymore. Let's just look straight at these charts. Okay, so the midterm, I do want to focus on the midterm. We're on the 4-hour chart right here, 4-hour candles. And I think last week I did say that if we do, I drew this, was that last week? I drew this kind of rough trend line that I thought we began the downtrend in the general equity markets last week on the S&P specifically. So drew this downtrend. Yesterday, we did break above this downtrend. So now the S&P is technically back in an uptrend. It has broken down this area of resistance, but it is kind of floating around this axis point between this previous line of support and this current line of resistance on the downtrend. So it will be interesting to see how this plays out. Again, with the crazy macroeconomic backdrop right now, the markets are in a state of limbo. I think because they're so overinflated currently, again, don't fight the Fed, whatever you want to say. I just don't think it can last this long. That's my bet. My money is on that. I do have hedges on the equity market. Although I am very bullish on many sectors, I am bearish on general equity markets. You guys know that if you've been watching. But again, it's going to be interesting. It has to either break above this or break below this for me to be convinced either way. Until then, I'm almost neutral. Although again, I do hold puts on the S&P and the SPXL and whatnot. I'm just indifferent on the market. It's just, this is such a crazy time, guys. Again, there's so much news every day. There's so much money, just whack money being pumped into this market. So much new retail interest, which again is great. I love that people are getting financially educated and taking that step towards financial freedom. But it does make for very uncertain times and very unpredictable markets. Okay, so let's take a look at the 5-year chart and actually zoom out from that. Again, take a quick look at the macro. I did cover this, but I think this is important to look at, especially if you're newer and you haven't seen these. Look how far we've freaking come. This is just dating back to 2007. So back in 2007, before this was the crash in 2007, okay? And that in 2007, that was 13 years ago, right? No, whatever. Let's go back. Let's go to 2010. So in 2010, I'm sure everyone here remembers 2010. We were at a high after the bounce from the recession at $1,300. Since then, we have climbed to a high in the S&P of $3,300. Okay, so we've almost 3x, 2.5x since 2010. And this bounce that seemed catastrophic back in March was only back down to about 2,200, which is still higher than the absolute highs back in 2015. Okay, so this is just a direct proof that the markets and the economy are a different place. Again, we might be going through a paradigm shift right now, which is very likely, and you do have to adapt. A paradigm shift where the complete capital structure of the markets is changing, and the way that capital flows in and out of the markets and within the markets is changing because of all this new retail interest, because of so much money just being flooded into our economy, okay? Which does pose great arguments for Bitcoin and safe haven assets like gold, Bitcoin, precious metals, cryptos, whatnot. We'll make other videos on that. Maybe I will cover that in Waves Weekly on Sunday. I will also talk about, in a future video, I will talk about how this market is full of shiny objects. It's been a video concept I've been thinking about a lot, and I think it is important. I want to talk about how what I'm taking from that and how I'm navigating that thesis myself, so stay tuned for that. But, yeah, as far as the short term, sorry. There we go. Long-term pullback. I I hate repeating myself, but for those of you who haven't seen me talk about this before, I do think that if the market does begin a significant pullback, which I think is very possible, even though whatever you want to say, don't fight the Fed, whatever, I do think that we can definitely pull back to at least the lows of 2015, maybe retest this same area that we had that liquidity crisis and crash in back in March, and come test around the $2,000 level. I think $2,000 would make sense. Big psychological even as well, so that would make sense to me. Let's move on to the biotech stocks, the COVID-related biotech stocks. We'll kick it off with Inovio, but as always, we will look over this real quick. Again, I don't want to push this down your guys' throats. You guys know this is these are headlines literally everywhere. There's so many articles exactly like this. Just read a few. Surgeon General cautions that death lags at least 2 weeks as cases rise in 40 states. Big argument within an argument that the death, cases are going up, but the death toll is relatively stagnant. Again, I'm so hesitant on any of these numbers. I've always said since the beginning of this crisis, and when they're releasing the COVID case numbers, it's a lagging indicator. You never know how many people actually have it. You just know how many people have gotten tested and test positive. So it's so hard to believe these numbers. You obviously get a general trend direction out of the numbers, but it's like the number, I take the numbers with a grain of salt. At least that's my opinion. Don't want to push any opinions on you guys, but that's just what I believe and how I'm thinking and how I've rationalized this. But global coronavirus cases rise to more than 11 million. Confirmed corona cases are rising in 40 to 50 states. Like, the news is obviously bad. The news is obviously trending negative, but that's what I want to kind of, again, caveat into with the fact that a lot of these stocks saw a lot of blood this week. Okay, so Inovio specifically. Sorry, let's go back to like the hourly chart on Inovio. So again, Inovio saw so I did in a stock talk about kind of a head and shoulders pattern playing out. It didn't play out an exact head and shoulders, but Inovio saw a significant retracement, and I do believe that it can pull back significantly down to. Again, I'm bullish on Inovio long term, and I do think that we can see some solid mid to long term. Like, I will be bullish on this entire sector as a whole until we do establish an effective vaccine. But to be completely honest and transparent, I did reduce my Inovio position. I am slightly bearish in the short term, just based on although the fundamentals, although it does seem to point in a direction that is bullish. Just based on the technicals, because a lot of traders, again, because Inovio ripped so much as well as the rest of this sector, ripped so much, traders enter the market, technicals do come into account more. And also the catalyst for this last week, sorry, I mentioned this in the newsletter, but I don't think I mentioned it here. The FDA did release some news in regard to cracking down as far as regulations are concerned, in terms of just more heavily regulating. And again, I don't know how much of an effect that realistically has on this sector and these stocks and these companies and their progress, but I do think it obviously dampened investor sentiment, which is so important, especially in this current market. Okay, so Inovio, I do believe they will pull back to like the $16 to $17 region. If Inovio hits $17, which I do think is very possible, I will definitely reestablish a decently sized position, just because it did set two highs around the mid $16 region back in May and April. So it set two highs right here. I think that it would make perfect sense especially considering it's a runner. It's shot up so much. I wouldn't be surprised at all to see it come back down to the $17 region. If it does hit $17, I will reestablish a significant position. And as always, I will keep you guys posted on this. This is an exciting sector right now. We love this sector here on the channel. If you've been tuning in, as you would know. So again, I'll keep you guys posted on all this. Try to keep this rolling. So Moderna, unfortunately, very sadly, finally broke this lower line of support that it's held over the past months. I've had these trend lines drawn here for literally probably like 2 months now, and sadly, Moderna has broken, at least on the hourly candle. Let's check the daily actually to see if it's broken. This trend line, if it closed a candle below, yeah, so it barely. So it closed the candle almost like on this trend line. And again, with trend lines, it's always a rough estimate. It's never decisive. But again, I mean, we could very well see a correction and like it makes sense to see a pullback in the sector just because it's done so well. Moderna, not so much. They have been capitulating for a long time, and I was very bullish on Moderna. If we do see a significant move up and like a false, kind of like a bear trap play out here, a bear trap where you see this trend line break, a lot of people are looking at this broken trend line and thinking sell, 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 which I actually sold earlier this week. Or I still hold a decent amount of Moderna. I will always hold a little bit of each of these stocks, but I did significantly reduce my position a few days ago or something. But this does worry me if we do see a rally back out of this and an immediate bounce off this line of support and continue this kind of general trend, then I will rethink my Moderna position. But as of right now, just objectively, it is looking bad from a technical perspective. Okay, so Novavax. I mean, it's hard to look at Novavax and not be super bullish on it. Of all the stocks, of all the vaccine stocks, I think it is up the most by percentage-wise year to date. So Novavax is an absolute ripper right now. It worries me that we did see, again, this is the two-wave theory, which we will look at in Vaxart and Sorrento soon, the two-wave theory, my good old two-wave theory. We did see this significant move up. Again, you see that correction, capitulation, sideways movement, another move up. So the second wave has already played out. So I do think we could definitely see a pullback in Novavax, and I think it would make sense to come back down to the $60 region. Obviously, that's a standard place for it to pull back, considering it just hit this high. And if you did watch the stock talk where I drew these lines, these are very macro lines. So I think in the past like 5, maybe even 10 years, Novavax did set a lot of like support and resistance lines around the $90 mark. So it almost perfectly bounced off $90, like kind of we talked about a couple weeks ago. And it is now correcting below that. This also lines up with the 20 EMA, which I will take into account every once in a while. I do actually look at those. I just don't bring them up much. I'm sorry. I need to articulate me actually looking at those more. But again, the $60 region, $60 to $65 region does kind of come into play with the 21 EMA. So I wouldn't be surprised to see Novavax pull back to $60. If it does do that, I will reestablish a position like a lot of these. Okay, so Vaxart actually looks very bullish to me, and this is what I'm talking about in the two-wave theory, right? Literally with all of these runners, you see the first move up, you see a bubble, you see the hype flood into the stock, you see a pop, you see it capitulate a little while, go sideways, and then you see the second wave. Okay, so I think that we will see a second wave in Vaxart. That said, it could go sideways for a while. That's very likely, considering that's what almost all of them do. It could go sideways and then see another move up, but I have not reduced my Vaxart position since I did establish it a little while back. Okay, so that said, Sorrento, similar thing. You guys almost look at Sorrento, how Sorrento's acting, because this is very well, almost exact, not exactly, you guys always know, like this is just kind of what my brain's doing. This could absolutely not play out, but Vaxart could potentially, like that's just what I'm seeing on the charts here, I'm sure you see it too, could potentially play out very similarly to Sorrento. So maybe see another little move down, sideways movement for a little bit. But again, Vaxart is a small cap company similar to Sorrento in market cap. So I do think a very similar thing could play out here. Sideways movement, and then you'll see another move up, which I do believe Sorrento is doing right now. And again, over the past month, it's just been following this nice channel upwards. So as long as Sorrento is floating within this channel, I am bullish on it, and Sorrento is currently my largest position of these. Okay, so we will call it there, guys. I'm going to try to not be too long-winded here. Please let me know what you're thinking about these stocks, what you're thinking about the general equity markets as a whole. If there's anything you want me to talk about in the Waves Weekly, again, there are some stocks I'm excited. I'm looking forward to going into next week, specifically IPOs. There's some Lemonade stocks. Excuse me. Lemonade is a big one that IPO'd. They went up like 140% or something crazy when they IPO'd on Thursday or Wednesday or Thursday. I think it was Thursday, just yesterday. Yeah. I think they just IPO'd yesterday, popped a cool 2x real quick off IPO. So we're living in crazy times. Again, shiny objects. I will make a video talking about shiny objects because this market is fueled on bubbles and shiny objects. So stay tuned for that. In the Waves Weekly, I will talk about the Lemonade stocks and some other IPOs that I'm looking forward to. Obviously, stocks to watch next week. You guys know the classic title. But we'll talk about those. So let me know if there's any specific news or anything you want me to cover in the Waves Weekly. I will also touch on crypto, Bitcoin stocks. Overstock has just been absolutely running lately. That's one of the stocks I've held in my portfolio for the longest time. I'll touch on Riot too. We'll look at a few of those stocks as well. Very bullish on the crypto sector right now. You guys know that if you tuned in. But yeah, we'll call it there, guys. Again, thank you so much for 10K subscribers. Like, it felt so good waking up this morning to 10,000 subscribers, and I just can't thank you guys enough. Like, I'm so pumped again on this community that we're building here, and just thank you guys for being a part of it. All right, so we'll call it there, guys. Also, if you guys do want to know exactly which positions I do hold in regard to these companies, please check out my complete portfolio and daily newsletter down below. It's exactly as it states. It's a complete breakdown of my entire portfolio. I update it every trading day, let you guys know which trades I made, new positions, old positions, and then send out the newsletter rationalizing my thoughts, why I made those trades, as well as what my general thoughts are on the equity markets. I send it out during market hours. I upload these videos a lot of times later in the day, probably night for some of you guys. I do live in Hawaii, so it's hard to kind of align the times. But I do send it out during market hours to let you guys know how I'm acting in more real time, okay? So check that out if you're interested at all. If not, no worries. Just thank you again, you guys. Like, I truly do love you guys. I truly appreciate you guys giving my time, and I learn so much from you guys every day, literally every day. So thank you for watching. Until next time, take action, make waves. Peace.